Hi everyone, in this video I'm going to do some Forex analysis. I'll look at the DXY first and then we'll look at the USD pairs. So first of all, if you want to go to tradingview.com and search for DXY, that is a dollar index. So the dollar index is a good indication of where the dollar is going next. Remember, in my previous videos I've always said if you trade Euro USD or GBP USD, you need to be looking at the dollar index beforehand. So if the dollar index goes up, the USD pairs go down. If the dollar index goes down, the USD pairs go up. So first of all, you want to mark your charts on the weekly time frame. So here you've got your weekly resistance and you've got your weekly support. Once you've done that, you can see that the price of DXY is actually on the weekly support. You can see it rejected it with a hammerhead candlestick here, and then you've got a bullish engulfing candlestick here. So it looks as though that price is going to reject it and go up from here. So that is your weekly support. You then go to a daily time frame. You want to repeat the process once again. So here you can see I've marked every low, because it's in a downtrend, I've marked each lower high. So here's a lower high, and here's your most recent lower low. So what I'll do is I'll drag this weekly down here, so that's up to date. And now I've got the daily support and daily resistance. So if the price travels from the support to the resistance, here you can see it traveling from the support and it'll go all the way here to the resistance. From here that it can either reject it or it can breach it, form a high low and go up. You then go to a H4 time frame. You can see here this is the most recent low high, this is the most recent lower low. Then when price broke this, it's now bullish. So this would be the most recent higher high. This is a higher low. So that's how you can identify the price, the direction. So if I go onto page 4, this is your lower low, so this is your support region. This would have been your most recent resistance, however price updated it and breached it, so this is your most recent resistance. So as you can see, price broke the structure, broke the lower high, made a lower low, lower high, low. It's made a higher high, higher low, higher high, higher low. So now you can see price is actually bullish. It's been a change of character, it's change of structure. So now I know price is next to a weekly H4 resistance. From here we expect it to reject it and go back down, or it could breach it and go up. However, right now the way it is, you can see it rejected it here. So there's a case where the next candlestick might be bearish candlestick, so we'll have to see how it plays out. If it is bearish, then we can enter a buy trade on the USD pairs because it indicates that the dollar index is going down and the Euro USD or GBP USD is going up. So now we've done that, if we go to Euro USD, go to the weekly, you can see here I've tracked the price between two levels. Here's your weekly support and here's your weekly resistance. So I've done that, but now you can see price breached it and it's made a new weekly. So what you could do is, if you look at the left, you can see this is the most recent weekly. So I'll update it here, so price can go all the way up to this weekly resistance. Then go to a daily time frame. You can see it's made a new higher high, so we'll have to update those levels as well. So this is the most recent higher high. Daily support here, but it's made a higher low. So you know price is going to move from support to resistance, so it'll go like that. So now price has rejected this resistance, it's expected to go down, it'll go to this level here because it's the most recent higher low. If we go to a H4 time frame, repeat the process, identify your levels. So for example, here would be your most recent higher low, this would be your higher high, and as you can see, price has respected this level. It's respected it once, twice, 3 times, and 4 times. So it indicates that is a strong support level here. So from here, you could potentially enter a buy trade and aim for this level here. So remember, DXY is at a resistance, it's potentially going to go down, which means EURUSD is at support and it's potentially going to go up. So the DXY and the EURUSD analysis correlates as so. So we can potentially enter a buy trade on this H4. So that now I know my bias is a buy trade on a H4. We can break it down further to a H1 level. So if I go to a H1 time frame, so today is Thursday the 10th of July. So today, analyze today's price action, we look at yesterday's price action. Get the Fibonacci retracement tool, drag it from the low of the day to the high. So this is a low to the high, as so. So these would be my levels before the market opened 8 o'clock this morning. However, because I've been busy all day, I haven't had a chance to do it this morning, that's why I'm doing it now. So you can see price breached the 0%, it went to minus 23 and close to minus 61. From there, it retraced all the way back to 100%. And now, these would be your updated levels. So that would be your most recent resistance. This is your most recent support. As you can see, the current candlestick, this is live price action at 2:57 p.m. You can see there's a large bearish candlestick here, but buyers are trying to push the price up. You can see a large candlestick here, so we'll have to see how this candlestick plays out. You can see it reject this area multiple times. It's rejected it once, twice, 3 times, and now it looks to be rejecting it for the 4th time. So we'll have to wait and see how this candlestick plays out. But you can see there's a massive wick here. Rejection of sellers to push the price down, buyers are trying to push the price up. I expect the next candlestick here to be bullish, as so. If that is the case, enter a buy trade, stop loss just below, TP would be here. And I'll show you right now how to do that with the risk to reward tool. So I'm going to be analyzing this pair right now. Look for entry in the next 15 to 30 minutes. So get the risk to reward ratio tool out, which is this one here, long position. Put it somewhere here. TP would be this level, or even just below where the candlestick is. And then TP would be 10 to 15 pips, or even 5 pips. Let's say here, just under that wick. So you're risking 10 pips to win 52 pips. So you're risking, if you turn £1 a pip, you're risking £100 to make £524. And that's a risk to reward ratio of 5.29. And that is pretty much how I would trade EURUSD. And so you just repeat the process for your other pairs. So I hope you enjoyed this video. Like, share and subscribe.